Welcome to the Startup Grind.
This is your third time to Startup Grind. I know you have a lot of scar tissue with us.
No, all the way from the tiny little place in that back room, and where was that place?
We hijacked that room in Mountain View that we don't speak about anymore.
It was great.
It was great, yeah. So Naval, about 2 years ago, you came down, you took an email from me like 2 in the morning, and for some reason you agreed to come, and we had about 250 people jammed in this little scary office. And
2 in the morning, and I was drunk, so.
You were drunk, yeah. You didn't know what you'd signed up for sure. But we appreciate you doing this. We're going to talk a little bit, but you and I have talked before, so let's just line up for questions right now. If you want to do a question, let's do it. Let's do it over here. And I'm going to take about 10 minutes with Naval, and then we'll open up to about 15 minutes of questions. Would be great. Give us a. Who knows what Angelus is? Who's on Angelus? Can we get that? Okay, it's pretty good. Quickly, tell us what Angelus is, Naval.
Yeah, Angelus is a big platform for startups. Today, we drive a lot of money into startups by introducing them to investors. We've got 46,000 startups on the platform that are active. We've got 5,000 what we call sophisticated vetted investors, including 2,000 venture capitalists and another 10,000 or so accrediteds. We also are a platform for finding talent, which is a service we launched recently. We have 7,000 curated developers and designers and product managers looking for new gigs, and we have 3,000 startups recruiting them. We'll also try and help companies with all their other high-value needs, including finding incubators, finding customers, and finding acquirers, which is going to get a lot more popular in the next few years.
How important is, let's start with the hiring. How important is this hiring feature to AngelList?
Yeah,
because it's not really core to the product, is it? Or
it's actually right now in volume, it's 3 times bigger than the fundraising side. So we launched it about 10 months ago, and today we do about 300 mutual opt-in introductions every week between startups and investors, and we do about 1,000 on the talent side. And basically these are meetings and screens, and then our data says that for every 1,000 introductions that we do on the talent side, results in about 90 offers and results in about 40 hires. So we're placing 40 people into jobs every week right now into startups. And it's sort of the right kind of people. It's people who want to be in startups. They understand what equity is. They understand what the startup experience is like. Many of them are entrepreneurs themselves, failed or successful. And all kinds of companies are recruiting, including like Quora and Path and Kickstarter and so on. So ironically, even though it's called Angelus, it's misnamed Angelus. The talent side right now is much bigger, which gives you an indication of how much demand there is on the talent side from startups.
Does it just become, does Angelus become, it's just the platform for startups? It's like the social network for startups?
Yeah,
does it encompass, does it start to bring in all these other things?
That's the hope. Basically, if you deserve to meet someone for a business transaction, whether it's an investor or talent or a customer, if your company is worthy, you should be able to do it without having to call in special favors or pound the pavement or work through individuals. So we just want to make that whole process more efficient of building your business relationships online. Now, that said, it can never happen 100% online. I don't think more than 30 or 40% of it can really happen online. There's a lot to be said for the human touch when you're meeting an investor or you're meeting someone that you want to recruit. But the part of it that can be done online, we will do online.
A couple of years ago, we spoke about, you talked about how it was really community-driven, almost patterned after Craigslist in some regards. We talked about maybe naming it Naval's List, but you and I couldn't come to terms on the domain, so I'm still squatting on it.
Well, good job. You hang on to that.
Oh, you'll come back. But is Angelus still like that? Is it still community-driven? Is it a business? Craigslist is a business, right. but how do you? Because it seems like it's moved from like this
I think Angelus will be a business in the sense that Craigslist is a business where they charge for a few services and not for most. And I think we'll be in the same vein. We'll probably charge a little bit on the talent side. If we manage to get help companies find customers, we might charge on that side. We will not charge on the fundraising side. We won't charge on acquisitions or anything like that. The fundraising side, first of all, is highly regulated. Secondly, there's adverse selection issues. You don't want companies or investors to have a reason to not use a platform. you don't want to put yourself in a competitive or zero-sum game situation with them. Do we have a mic issue?
Yeah, should we give him Andy's handheld? Andy, where's your handheld?
Yeah.
Let's just hand that to Naval. Great. The audio guys have still been great. Don't let this change your opinion of him. Albert, don't worry. You've been good. Okay. So who competes with you guys? I mean, you're not, you're kind of zenny. I mean, you're kind of like, you might say there's no competitors, but who is it? Is it August? Is it these angel syndicates? Is it,
Yeah, I guess I would say there are no competitors because firstly, I'm trying to make the whole startup market more efficient.
Yeah.
And I don't think anybody is out there trying to do that for everything a startup needs. Secondly, I don't care if there's competition or not. I mean, even though today we probably have 99% market share, it's just...
you think it's that high, really?
Online, sure.
Wow.
There's a network effect to these things. Startups want to be where all the investors are. The investors want to be where all the startups are.
Yeah.
Same way the talent wants to be where the startups are and vice versa. So it depends how you define the market. I mean, if you were to look at the recruiting market's gigantic. We're nothing in that market.
Yeah.
But if you were to say the recruiting market for people who want to find jobs in high-quality startups, then we start making a big impact. That said, the real competition is that just too many of the processes today are offline. Especially on the investor side, there are a lot of investors who don't want to be online, they don't want to be visible, they don't want to be tracked, or they don't want, or they want to feel like their deal flow is still proprietary, or there's some advantage to proprietary deal flow. And I think there's a set of investors who are more modern and hip. These are the same people you'll find tweeting and on Facebook. And there's a set who don't even want their name online anywhere. So I think the real competition is just moving people from a completely offline activity to at least a partially online pattern.
Does this, there's this whole stigma of the Series A crunch, all this stuff everyone's talking about. How does this affect you guys? Because are you seeing, you have the best data set, in my opinion. The data you get to look at, to me, is better than anyone else.
Yeah,
so you have a better sense. Are you seeing fewer submissions? Are you seeing fewer startups? Are you seeing more startups? Are you seeing?
Yeah, we do have the best data set, but it still sucks. I mean, you still get a very incomplete view, and you don't get a lot of the data, and a lot of it's self-reported. So I hate to draw broad generalizations. That said, I mean, in my own personal observations, I would say that our deal flow volume in terms of high-quality startups that are showing up to raise money is probably up 3x in the last few months.
Yeah.
So it felt like we hit another tipping point on the startup quality side. On the investor side, I'd say the classic Silicon Valley, seed and Series A writers have probably pulled back. They're probably about half the activity that they were, say, a year or two ago when it was pretty maniacal. Valuations are definitely coming down.
To where? Where are you seeing them?
Yeah.
I mean, I know it's a loaded question.
I mean, I would say like the average, like if you look at in 2007, 2008, the average pre-money was between 1 and 3 million.
Okay.
2010, 11, and 12, it was probably in the $3 to $6 million range. And for a while, there was getting closer to 6. Now it's coming back to sort of the 3, 4, 5 range,
okay.
Which I think is much more sustainable.
And that's anybody from like a YC company?
Yeah, obviously there's huge variation. We have a graph up at angel.co/valuations. It's anonymized data from about 1,200 startups, and you can break it down by location, sector, incubator. So it'll give you a general sense. But every company is a very unique product or asset.
Sure.
In that sense, it's very much like Match.com. You can't compare two people on Match.com explicitly because they're each unique. And I think Angelus is very much the same way. Because we've seen sort of this coming, we've been adding a lot more investors to the platform and alternate forms of liquidity. So we have this accredited crowdfunding feature now where people who are not really professional angels but want to get some exposure to startups can write very small checks, and we bundle them up for the startups.
It's really cool because you send out these emails and I've seen them, and it says, hey, Mike Maples invested in this company. You can too. And it's like I could just see, I mean, I'm in no position to invest. I'm not an investor, but I could just see people saying, "Oh, cool! I'll jump in for 5Gs with Mike Maples," and I mean, it's like
that's what we'd hope to avoid the completely uneducated investors. So we
like
do
myself.
Well,
Naval's list just went up.
Yeah, you're actually pretty
educated,
educated, but I would say generally we try and encourage those investors who are coming onto the platform and want to write small checks. Go slow. You're gonna have to write a lot of them. You're probably gonna lose your money. it's a learning experience. So we're curating that set of deals that has access to that very carefully right now. And we're encouraging those investors to spread things out. And we're working with Second Market because they're a registered broker-dealer. Yeah. And they can do the suitability checks and the Patriot Act requirements and all that to make sure these are...
It's legal.
It's legal, and also these investors are sophisticated enough that, if they lose their money, they won't be completely bent out of shape, and we in the company won't be on the receiving ends of lots of lawsuits.
Sure. Yeah, I think, but you're still leveraging these names, this Silicon Valley talent that's in a lot of early stage deals, right?
Yeah, I mean
that's the whole point. Like, there's
sure.
public profiles with startups. Hey, David Lee invested, Naval invested, or these guys invested.
I mean, there's 4 things we focus on the companies when they go out for funding. Product. The problem with product is everybody thinks their product is great and unique, so you have to have some third-party assessment of that. But we try and showcase a product. The team and their backgrounds, what schools they went to, what companies they worked at, what products they built. The social proof, as you call it, which is who else is investing in the round, putting their own money in, who's advising, who's putting their time into it. And then finally, and most important, is traction, which is quantitative evidence of customer demand for the product. So it can be customer references from B2B customers, or it can be traction data from Google Analytics, and that kind of stuff really matters. And then, frankly, as an investor, it's a very tough time to be an investor because valuations are all over the map. There's tons of startups out there, new ones being created every day. So as an investor, you have to go slow and filter out a lot of the noise and just be very judicious about what you do.
Talk about customer references. Steve Blank was here yesterday talking about customer validation. We've looked at we've Lean or his stuff. What are you doing to integrate that into Angelus? How are you guys thinking about it?
Yeah, so what we're doing right now is we're trying to capture the customer demand on the startup profiles. So one of the issues you have as a startup is if you're raising money from like 10 small angels, you don't want to give your customer references to each one of them to call up. Also, you want to be able to use the customer reference as a way to showcase what you're doing. We want companies to trend on Angelus not because of the followers that they have, but because of the customer traction that they have. So we're allowing the companies to add customer references directly on the profile. And that way investors can see them, talent can see them, and see the company's real. Longer term, we also want to give maybe some way for the startups to barter those customer relationships with other startups. So you could say, hey, I can help you find a customer at this place if you can help me with a customer at that place. So maybe do some cross-pollination intelligently and with the startups involved.
We have any questions over here? Anybody want to ask questions? Or in the audience? Yeah, go ahead, Kurt.
I know.
Hold on, let me say, do you know who Kurt is? No. This is the guy that slept in his car for 4 months. Did anybody read about that guy?
I did.
This guy's
actually.
a good dude. Good dude. Anyway.
That was pretty impressive.
Oh, clap.
So.
There you go. It was impressive. And he's still married. You're still married, right?
Yes.
She wasn't there with him.
I love that's what I'm known for.
So now you're driving a Lyft? Is that the new?
No, I got a place in Mountain View now. But I see that Angelus has an API, and I was just curious what kind of ideas you would like to see built on top of Angelus.
Yeah, I'm not sure we're big enough yet for somebody else to build a business on us, although I would love for that to be true, and be like the F8 type platform.
It's a cool little
cool products, yeah. I think people still don't properly do the data mining and surfacing of cool stuff going on there. I mean, we can't even keep up. We're completely overwhelmed. We get 100 startup profiles created a day. And we algorithmically score and sort and stack and filter them, and then we try and look at 15 or 20. But we miss tons of great companies. I would say for every 5 great companies that shows up in Angelus and eventually gets funded somewhere somehow, we ourselves only manage to catch 1 or 2 of them in time to feature them to investors. So that's a failing on our part. So someone could mine that data and find a lot of great companies and startups and people. So that's one example of things that we build. Someone could also build, better discovery tools for the investors, data dashboards for them. One request we get a lot is investors say to us, hey, why don't you create a way for me to track my entire portfolio so my companies can send me updates and their status messages and their traction. They can do it semi-privately or completely privately. And we don't want to go down that path because it's a lot of workflow, and the Angelus reputation is for being transparent. So trying to also say, well, there's also this private side to it might be too hard to get across. But I think there's an opportunity for someone there to build a platform that's adjacent to our platform and uses the API to provide private updates to investors of what their startups are up to. Because right now, seed investors are overwhelmed with keeping track of their companies. And a lot of VCs have been doing early stage investments almost as an option to say, well, when the company's big, then I'll do the Series A. But what they find is they can't even track the company well. So when the Series A comes around, they just miss it. So I think that is an example of something that's quite valuable that could be built even from inside of a car.
It is interesting that you've got 100,000 people, startups, to submit on AngelList, and how many of them how many people have built on top of AngelList? Do you guys have it?
Yeah, we have an API. A couple of people have built some little mobile apps, so that's a little risky.
Handful of people, though, right? It's not any huge numbers.
Well, right now, the biggest use case is actually there's a bunch of VC firms who are using the API, and they have VCs are trying to innovate too because it's becoming a very fast-moving market. So a lot of the forward-thinking VC firms have in-house hackers. And they're using the API now, and they're combining it with other data sources they have, like maybe their Salesforce system for tracking startups, plus Twitter and the App Store and whatever things that they want to do. And they're trying to use that to figure out what's an interesting startup before it gets too widely known. Yeah, exactly.
Obviously, you have already invested in a lot of companies which have been very successful, so you probably know which company will be or something. Have you find any trend that all the company you've invested has been successful? That what is the most common trend or attributes you can say?
It's still a very difficult business. I'd say like 1 out of 10 of my investments succeed. It's not a great hit rate. Now, the ones that have succeeded are extremely successful, so they make up for a lot of the others. But there's a few general rules of thumb as an investor I would follow. One is, these days, anything consumer-facing, you want to see some traction before you invest, because otherwise it's just too hard to predict what people are going to use. You want to keep some valuation discipline. Valuations do matter. One common trait I found amongst many of the great companies is that the founders are in it for the long haul. And the way you see that evidence is that very early on, they are extremely deliberate about all kinds of small decisions. Stuff you might think, like, that doesn't matter, why are you obsessing over it? And what you realize is their nature to obsess over these things, because they are building, they feel like they're laying the bricks and the foundations of a skyscraper, so they have to get every little detail right. And sometimes that obsessiveness can drive you crazy, where they're always questioning, tweaking. But then when you look back over the ages, you realize that's the mark of someone who's thinking really far forward. And that's what makes them think at such a detailed level now. Whereas the people who are sort of flippant about things and are willing to kind of just take it as it comes, they're often signaling to you, and maybe even to themselves, that they'll sell the company the first chance they get, or the moment that it looks like they're going to run out of cash, they'll shut down. So I think that long-term mentality is probably the single most important indicator of an entrepreneur's success. But that it's by no means the only thing. There's a very competitive environment. Most startups fail, and so you just got to stick with it.
Hi, Naval. My name is Victor, founder of Scribble. 2 quick questions. One is, as you've moved from funding to talent matching, I wonder, as you think about what more you can do, have you thought about basically sort of support services matching, so accountants, attorneys, those sorts of people?
Yeah, that's absolutely coming. That's why you can see on company profiles, people can already start adding. They can already start adding their customers, and there'll be a section for vendors too, and then we'll start trying to match them up there also. Okay.
And then the second sort of probably more important question is, you just mentioned traction as an emphasis point when you're thinking about how a startup is evaluated on AngelList. When you go to talk to VCs, that is one of the biggest things, especially if you're consumer-oriented. I tend to often think of AngelList as being a place where you can potentially meet angels that are actually happy to potentially take the risk before you get, quote-unquote, the level of traction that a VC would want. So when you say traction, what does that mean in an AngelList environment versus what a VC is looking for?
Yeah, it definitely changes from vertical to vertical. So in games right now, games is almost unfundable as a category. You need enormous traction before anyone will pay attention. Same with consumer social networks. For an e-commerce app, traction might be a lot lower. Angels generally obviously don't need the same level of traction as a VC. The VCs these days are doing much more what used to be considered Series Bs and Series C rounds. They're looking for really mega traction, million users plus. But even with angels, if you've got a consumer-facing app, you better have 100K users or more before you can do kind of that $500K to $1 million chunky angel round. The expectation is if you have less than that with a consumer-facing app, you should go to an incubator. Or maybe just do a very small friends and family round. Enterprise is different. Like if you have, on the enterprise side, if you have 5 early customers who are in beta, maybe even if they're not paying you, but they're indicative of people who might be able to pay you, and there's a lot more like these out there, that's usually enough. But again, it's very hard to draw generalizations. Every startup is so unique. My ultimate definition of attraction is the definition that Judge Posner used when the Supreme Court defined porn, which is that you know it when you see it. So.
Hi, thanks. Mark Perlmutter, Naval, how you doing? Earlier today, we heard some comments about crowdfunding and whether it's threatening or complementary to the VCs and whether they're going down the pipes and that's going to take over. Just wondering if you had some views. Fred Wilson came out with a prediction $300 billion will be unleashed through the crowdfunding at some point. What's your thoughts on that, and where does it fit in AngelList?
Yeah, so there's 2 different things in crowdfunding. There's equity crowdfunding and there's sort of product crowdfunding or passion crowdfunding, which is kind of more what Kickstarter is. I think the majority of the $300 billion Fred is referring to is probably in that passion product part of it. Equity crowdfunding is different because somebody needs to still sit down and do the homework and do the due diligence on the company. I would be pretty surprised if companies start raising huge amounts through pure equity crowdfunding with no physical meetings. That has a big possibility of fraud. So my sense is equity crowdfunding is going to be a reasonable component of a company's fundraising process, but it's always going to be an adjunct to someone on the ground having done the homework, having done the diligence, risking their own money, and putting enough at stake that they have really vetted the company. I could be wrong, but in that model, companies raise from the crowd not because they need the capital, but because they need the supporters. Now, that's one side of it. There's another side of it, which is equity crowdfunding wasn't really designed for tech startups, even though we like to think the world revolves around tech. The Jobs Act equity crowdfunding is really much more designed for the restaurant down the street that's got some new kind of food product and has a loyal, passionate following, and this local bank won't lend to them because they don't do equity, they just do debt. So I think, or you could see equity crowdfunding for someone launching a company that researches rare diseases. There's 50,000 of you who have this disease that really matters to you. Nobody else does. No big pharma is going to take it on. So I think the majority of whatever predictions people are making, those dollars are not going to go towards tech startups. The tech startup community for fundraising is already pretty alive and well. So you could see it as an adjunct, but I don't see it as the core.
Thanks. We're going to do one more.
One more exception I'd point to that is international, where there are no angel or VC markets in certain sectors. There, equity crowdfunding might be your only choice.
Hi, my name is Matt, and my question is, do you see, going with crowdfunding, is there going to be, innovation in terms of, people investing for others for like mutual fundish crowdfunding, like people becoming the expert in picking the stars, investing for others? Do you see, opportunity for innovation?
Yeah, absolutely. I mean, you look at Wall Street, right? They're so sophisticated about this stuff. They have index funds, they have hedge funds, they have derivatives, they have funds of funds. So if you can figure out a way to charge somebody a fee, Wall Street has done it, right? And so those innovations are probably coming to our industry too. They'll probably come slowly though, because each one of the things that I just mentioned falls into a completely different regulatory regime and structure. And so, for example, if you're doing derivatives, that's the CFTC. If you're running a venture fund, that has a set of regulations. If you're doing a mutual fund, that's 40 Act, SEC, totally different regulations. If you're doing equity crowdfunding, that's Jobs Act. If you're doing, then there's 506 exemption. It's a complete nightmare. And trying to make these into one smooth continuum of products is very difficult. And most startups, frankly, don't want to be experts in this stuff. They're just like, just get me the money from people who aren't going to sue me and screw me over and will help me out. And so that's what Angelus is there for, and we're going to help work through it. But it's a really complicated thing.
Let me ask you one final question. We had attendees from over 20 countries here. How does Angelus compete globally, and what are you doing today?
So I think where we've actually had the biggest impact is outside of Silicon Valley. So we can always connect investors to startups in Silicon Valley and accelerate their fundraising, and that's great. But all we're doing there is accelerating a fundraising. We're not making it possible. Our best success stories, in my mind, the things I'm proudest of, is the companies that were overseas, had good traction, had good product, but they were in a market where there were just very few investors. And so we connected them to Bay Area investors, or now we're actually doing the reverse. So examples are, Tribe HR in Waterloo, Vancouver. They got funded by Matrix Partners who's based here, Matrix met them on AngelList. We got Talia, a team that had just moved here from France. They got funded by top-tier VCs here through AngelList. Cinemagram in Montreal, in Toronto, Well.ca in Canada as well. So we actually just recently got a company. I don't know if I can disclose who they are because I don't know if they announced it yet. But
yeah, I heard about it.
They had term sheets here locally. Oh yeah, you know this one.
Oh yeah, we're all in the know. Go ahead.
Yeah, and they took a term sheet from a VC in London through AngelList. So I like those cross-border stories. There's an Austin-based company that got a Brussels-based VC. So those kinds of things are fun because they would have never met otherwise. There was no chance of that.
Well, thanks for coming, man. We really appreciate it.
Hey, it's awesome. And before I get stop. Before I get off stage, I think the real star here is Derek, who's put on the whole show. So you're probably exhausted. Thanks for doing that.
Let me hear it.
So we've got a little.